Hello, good morning. It is Tuesday, January 16th, 2024. Today we're watching the S&P 500 contract ESH 2024. Give me 1 second to pull up my stream, make sure everything is proper. Alright. Computer is a little laggy. Alright, now that that's out of the way, let's see. I'm gonna quickly go to dollar before it's too late. So this morning we had high impact news at 8:30, so you can see that right there. We had dropped down into this 1 week fair value gap SIBI from December 11th to 15th, the weekly candle. So like I mentioned in my weekly recaps or weekly roadmaps, I wanted to see this treated as inversion, specifically the low, the consequent encroachment, and the high. You can see we had, I'm not really sure what this is here, but you can see, was this not a glitch or a sort of just a weird, don't know what you would call it, sort of like almost like an inefficiency. I mean, it seems like it shouldn't be there. It's very weirdly delivered. So you can see how we treated the low, then the consequent encroachment right here, sort of creating the low right here. So I'm watching this low, so now we have to determine whether this low is likely to be attacked or not. I like the fact that it's below the IPDA true day open, so the 12 a.m. opening, and right now we're trading off the high of that SIBI, so that's the reason I wanted to see this 8:30 a.m. Fair value gap, which is a SIBI, but I want to treat it as inversion, so I think it goes above and then treats it as support. So right now it looks as if it's building it to be as inversion, but it very much could easily trade lower, so that's why I don't like to build up too much of a bias or jump the gun or jump the boat, whatever. I don't want to do that right now. But you can see we had this down delivery since 8:25 a.m. So that opening price on the 8:25 a.m. candle is 103.278. So once we cross that, I would like to see it treated as an order block. So that would lend the idea of this being treated as support, and the idea of this monthly volume imbalance low uh, as a drawn liquidity or an objective. So now note this high, this London high at 103, sorry, yeah, 103.225. So if you draw that out and extend it out in time, I'm going to make that yellow. You can see that's right where we're trading right now. So ideally, we want to see this treated as an equilibrium, meaning anything below it is discount and above is premium. So should it go down, we have this fair value gap here and this fair value gap here. Now lining up this fair value gap and this one, I wouldn't want to see this one traded to. I would like to see it treated as breakaway. But should it trade to it, that's okay. I just wouldn't want to see a closing price below the low of the inefficiency, which is the high of this candle. So that's dollar. And we're 25 minutes away from the 9:30 open. So watching that. And then S&P from the monthly, well, you see that buy side that we spoke about in the weekly roadmaps. You see that we've worked above it last month, and going into January we've worked a little bit above it, but failed to break that previous month high, which I mentioned I did not want to see that traded to. And then you refine down to the weekly, and I had also mentioned that should we trade up into this previous week high, I don't want to see the previous month's high traded to. So I specifically said they shouldn't attack that or something along those lines. Can't remember actually now, but they did attack that previous week high, and then they did not attack the previous month high. So we're just, a couple handles away, almost less than 5 handles away from that previous month high. So yes, there's buy side resting above here. There's also buy side resting above here, or sorry, sell side resting below here. So now we have to weigh out, is this likely to be attacked? Yes or no? So for this weekly candle, and what is this that's bothering me? Right. For this weekly candle, you see we have the Sunday open above the monthly buy side. We've worked up into it just a little bit above the opening and closing price of these candles. 1, 2, and 3. So the close, open, and the close again. And so just note the previous almost 10 to 12 weeks of candles, starting all the way from here. You see that we've worked up pretty high, from where we started down here. Where is it? In January of 2023, we've worked up pretty high. So I do think we're due for a small retracement on the weekly time frame, and that would sort of start to build itself. So I think we're likely to see some delivery to the downside, and I'm anticipating a little bit of delivery during this weekly candle. So to the daily. So rather than focusing on all of this, right, we've refined from our monthly time frames down to the daily, so we can zoom in inside the current range that is known to be that the algorithm is working in. So that January 10th rejection block that I mentioned, you can see that's where the high of this candle is on Tuesday, which was actually worked up into on Monday, but it's combined on the Tuesday candle because yesterday was a bank holiday. I posted this inefficiency on my Discord, saying that I'd like to see it treated as a discount array or a discount draw. It was around on Wednesday or Tuesday night, so you can see that I was in fact wrong, in a sense, and we worked up higher. And I had also said if we work up into that previous week high at that time, I won't want to see that previous month high traded too. So now that next day we worked up, and then on Thursday we had high impact news. You can see we created quite a candle, and right now the Friday candle was an inside day, so we breached the low of that. So typically, I don't know if you guys know the strat. I'm not a subscriber. Well, I like it. I think it's all probabilities, and so, but this would be seemed as like a 3-1 candle or something, and I don't know about all of this. I really just like these 3-1, 2-1 formations, but I don't really look at it that way. So, but I am looking at it that way in a sense that typically traders would expect, once this candle's low is broken, that we have follow through or continuation down into this low, and that lends well to the idea of, in my analysis or my roadmaps, I mentioned that these lows, I like them to be attacked because they're lending well to the idea of trendline support. And you can see, I'm going to try this, that it kind of just flows too well, too clean, and there's really no proper way to draw this, but kind of like that. And that also is in confluence with the 4781.75 gradient. So I'd like to see them just dip it below here, this low here, and then see where they want to go from there. 60-minute on the S&P 500. I was watching this 7 p.m. fair value gap. However, it was not traded to, but that's not a huge deal because time of day that was at 8 a.m. and then this previous candle was 7 a.m. So that's not even a kill zone or the time that I like to operate. Typically I wait for the 9:30 open, so it's not like there's a missed opportunity or so or anything along those lines, but it's just data right now. So the data that I see on the 60-minute, let's zoom out a little. Let's go right here actually. So you can see from Friday into Monday, we've just kind of been meandering around. Rejection block right there, like I said on Monday. 1 second. Okay, I thought I had to sneeze. And where was I? Let's see. Oh yeah. So we worked up, failed to trade to the 7 p.m. fair value gap or SIBI, but we worked up into this buy side. So I do like that. We do have sort of equal highs here that they can attack, but right now my focus is down here on this Thursday 11 a.m. low. So if you go to my Twitter and look at the charts I posted, I drew the I pointed out the rejection block here. Then there was an inefficiency, a BISI specifically, and then there's sell side below here. So we traded below that sell side into an inefficiency, and we have the rejection block and sell side below here pending. So in terms of counter bias, or just being aware of the flip side of the coin. Not saying I'm switching bias. I'm okay with being wrong in terms of should it go trade up and, you know, just somehow trade up into previous week high. That's not something that hurts me anymore like it used to. So anyways, in terms of the flip side of the coin, those inefficiencies I pointed out could be possibly used if we trade higher, period. So the monthly, practically the same thing. What is this? Remove that. Alright, so monthly, Sunday open, previous month high, previous month low. Once we go lower, we'll have some gradients on this. Weekly, you can see we're still inside that weekly candle, so we expect some measure of expansion to one side or another, always. And should it be an inside week, that is also possible, but hold on. So like I said, previous week high, previous week low, we have this inefficiency here. I like it drawing down below that 0.75 gradient at 16,854, and then into this December 11th to 15th BISI high. So that would be 16,758 and a quarter, or sorry, in 2 quarters. Down to the daily. Slowly clearing it up at the same time. So now zoom in on the monthly range of the previous month's candle, and you have a much more crystal clear view as to what the algorithm is trying to do. And you can see that those trend lines support highs or lows, playing very well into narrative, but I'd like to see at least this low attack, like I mentioned, on the S&P. And note this inefficiency that I spoke about on my weekly roadmap. On the Sunday open, it was around 12:41 a.m. that I posted it. So reacting off of that quite well. Did not touch the high, which I do like. That's actually a good thing. We've traded into the volume imbalance here. So, oh, that's what this is. Okay, that's lower time frame. Anyways, that same daily draw is a little bit further, but if possible, Nasdaq could stretch and reach that in sympathy with the S&P. So that same January 2nd, SIBI is much larger in comparison to the ES. So I'm definitely watching that on Nasdaq, and specifically the high. But if we're looking at all levels, the consequent encroachment and the low. So the low would be as a objective after this low is traded to, then consequent encroachment. Once we trade below it, I use it as a means of premium, but right now we're above it. So until we get below that consequent encroachment, I'm not really looking for this low. So that's using the daily time frame down on lower time frames. So I have all these levels on my chart for a reason, and I'm looking at them and expecting specific or certain functions. So it's hard to say one specific thing that I'd like to see this happen exactly at this time and in exactly this way or form. I can only give like a sort of, I guess, gesture as to what I'm expecting. What I would be expecting is I'd want to see this traded, should it trade up into here, I'm not saying it will, should it trade up into here, I'd like to see it bump into that and then work its way lower. Now, I'm going to give all possible options here, but this is not something that like I would be using as a roadmap. This is kind of just me and my inner dialogue. So, like I said, should it trade up into here, I'd like to see a bump and then work lower, and then intraday would be attacking buy stops above this high. Should I trade up into here and want to go up for that previous week high, then I'd like to see it use as support, and this Sunday open would be used as or anything below the Sunday open would be used as discounts for that high. Now, right now, I am mostly bearish. Well, I'm actually very bearish, and I'm focusing on this specific low. So now that we've gotten all that out of the way, we have 10 minutes, 9 minutes, and 45 seconds till the open. So I have the S&P pulled up. Clear up my charts. I like to clean my charts. So for anyone who has been watching, I mentioned this December 21st inversion fair value gap and said I do not want to see the low delivered. You can see from whatever day that was, I think it was Tuesday. Well, actually, in Tuesday, I wrote it on my notes on Tuesday, but don't remember what day it was. Anyways, it was in my previous live stream, and I think that was Thursday. Yeah, it was Thursday. I said I don't want to see the low delivered, and it was not. Traded down and into the high, then started expanding higher up above this previous week high, into consequent encroachment, into this high, and into that Friday high. So now I'm measuring the 0.75 gradient at 103.352, and then that monthly volume imbalance low. So that would be continued risk off, which would aid the lower prices on the S&P and NASDAQ. So yeah. And you know, we have some time remaining, so 60-minute, like I mentioned, that 7 p.m. fair value gap, and then go to NASDAQ, and same fair value gap. You can see that we wicked up into it and then began trading lower. So I'd like to see this low next on the 60-minute. So these are all just like measurements. None of these are really trade ideas. I've noticed that when you start to focus on trade ideas rather than the actual price action, you only make it harder for yourself, because it's very easy to be wrong, especially with all the probabilities in the market. It's very, very easy to be wrong. So that's why it's important to just keep your calm and really take that time to align yourself with the algorithm and the markets. And then when you are really dialed in and focused in on high probability and not how much money you're making, that is when you are at your highest probability, I guess. So I'm not really looking to go short here. I'm not really looking to go long. It might sound kind of strange for some people that how is that trading then? But I guess when you know, you know. So yeah. So if you note the dollar right now, it has traded into that BISI or fair value gap that I said that I didn't want to see it traded into. So I'm watching that. this little rectangle right here is the opening range. So I'm watching that in the first 30 minutes. Like to see how they take it, basically, or what they do with it. I want you to think about all the people who are watching this right now, just waiting, looking at the 10-second countdown and waiting to place their orders. So that's always something that I'm thinking about, and a reaction like this makes me believe that they're going to want to induce people. So let's see. So there's that buy side right there. So I'm really just watching to see whether it'll trade higher, and if so, how high. And I'm waiting for the right time to reverse and go short, basically. So we can mark the 9:30 opening price before we forget. On all three markets that we're watching. So I'm doing that right now. So ran up into buy side right here, and we've traded lower so far. So I'm still waiting to see, is this the is this going to be the high before we trade lower, or is it not? So I'm not jumping the gun here or jumping the boat, like I said. So note that reference to the 930 opening price, and then note how NASDAQ is above the 930 opening price right now. So you have to ask yourself, is it building a premium, or is it just going to go higher? These are all things that I look at. It's not just buy and sell. And to be honest, when I was new, I also looked at it in terms of just buy and sell only. When you look at it like that, it only makes it harder. It's like you're just setting yourself back. And it's hard to kind of split from that thought process of buy and sell, because at the end of the day, that's really what you have to do in order to make money. But you have to, I mean, for anyone who's watched the core content, specifically month one, you have to look in between the gray. I think that's what it is, but something along those lines. It's so hard to explain sometimes, but just don't get ahead of yourself, honestly. And so NASDAQ takes the 930 high as it was. Is this 931 high and 935? So we've made new highs on NASDAQ. So and then in comparison to ES, we have this 930 and 931 high. So we're below that right now, and the dollar is beginning to trade higher. I'm gonna go back to the dollar real quick. Like I mentioned, that old London high is gonna be crucial. Anything below it, treat it as discount, and above is premium. So right now, relative to that high, we're in a premium. So we've worked lower, and we're beginning to start to work higher from this low. Where was that low? Well, 5 minutes right here. It's at that fair value gap that I liked to see as breakaway. I said if we trade into it, it's fine. So it's traded into the consequent encroachment, and this is the 930 opening price. You see we've worked down, delivered the low of that 8:30 a.m. Not institutional, inversion fair value gap, and I'd like to see it start to expand higher up and above this 8:25 a.m. Opening price. And so real time, I'm going to change this. I don't believe that this is an order block. I don't know enough about order block theory, but I'd like to see it be treated as an order block, meaning all of this, I'll just leave it there now that it's there. All of this down delivery was opposing to the real run, and anything spent inside from this high to this low, anything after that is used as sort of time distortion. And once we break above this high, things are kind of, that's like a tip off to the algorithm, I guess. So watch that yellow line. Go back to S&P, and I'm gonna stay on the S&P here for a little bit now, because I've been moving back and forth a lot. So look at the reaction off that 9:30 opening price. Trade up into it once, trade lower, go back into it, precision, and boom, fall lower. So I'm obviously watching this low here as the first low to the current market price, and then from there I'd be watching these two lows. And so there's that low. So you'd want to journal that. And now I'd like to see the dollar pick up some speed here, lending to the idea of kind of just sinking down into these lows in a very short amount of time. So that would mean speed and efficiency. I'm not saying it's going to happen on one candle, but when it starts to move lower, it's going to be like it really starts to move lower. So I'm going to go on the 5 minute because the 1 minute is just too small right now. It's hard to see using the range from here to here. So actually, let's see if we can improvise. I guess this is good. Anyways, we know that we want to see the sell side, so I'm just going to keep the pan on this. And as we're breaking old highs and lows, I'm updating these little boxes that represent kill zones. Why did this do that? LOL. Alright. New low. So you could run down equity here. When I first started trading, I didn't see the point of running down equity, but man, it's like a game changer. And so, nice little stab into that. So I've ran you through the dollar index, NASDAQ, S&P. On those three markets, I've ran you through the monthly, the weekly, the daily, and the 60-minute, down to, for most of them, the hourly, 15 and 5-minute charts. And so we've established a monthly bias, we've established the weekly bias, daily draws, and such. And so now we have to use those ideas to build intraday ideas. And so right now, even though we're looking for lower prices, it's very normal for the market to do something like this after taking that inefficiency low. I could expect it to, well, we've already traded here, but I'd like to see this treated as a breakaway gap or a measuring gap. So, meaning I don't want to see this traded to, and should it trade up into it, I would reassess the situation. In my opinion, that sell side there's the orders resting below here. You look at the consolidation, also the fact that we're coming off a bank holiday yesterday. Look at the orders resting below here. Anyone who was long during London is going to have their stop loss orders resting below here. And so the idea of going all the way back up into this 1 minute SIBI at 938, it's like, that's sort of like giving them time to adjust their orders or reassess their situation. We want to shock them basically, and we want to essentially attack those orders, right? If you had a stop below here, just imagine you had a stop below here, and you see it right now, right here, and if it were to go back up here, that would give you time to either mitigate your loss or you know, close out the position or reassess the situation. We kind of want to, I'd like to see it just jab into that in a couple candles or so, and yeah, that's really, yeah, I just want to see it jab into that. So once that low is broken, you journal that as new low, run down equity. And that way you're always, every low that's taken, you're always kind of protecting yourself. And this is just something I'm practicing for when I'm doing big contract positions. I think it's almost like a life hack. Anyways, we're approaching those lows. Let's just call it 47.87, is that? Let's see. 47.85 and a quarter. So I didn't call the price, which I typically like to do, but I got the idea across. So I don't know why, I just feel like if I'm not very specific or in detail or binary in terms of my callouts, people are gonna nitpick. I'm not so much worried about what people will say, but I want the point across for anyone who is learning. And honestly, this is nothing to do with price, but just the way that ICT delivered his entire mentorship from when I started learning in 2022, the 2022 mentorship, into 2023, it was just all so beautiful, man. Like, he was so precise. He was clear and concise too, and rather than, you know, drawing lines and just letting them, or saying nothing and posting a blank chart, the lines that he drew, all of them had a purpose, all of them had a meaning, and that was just, I don't even know, it was just so nice, like, seeing that there is logic behind the market. But yeah. Coming up on the 950 to 1010 macro, so let's see whether these lows are booked in that time frame, that 20-minute window. So that high on dollar that we mentioned has just been traded to. So that lends well to the idea of risk off and just giving it enough juice to trade lower into these lows. We're very close, as you can see. And we've closed above that closing or opening price that I mentioned on dollar. So even though I have the S&P pulled up here, I'm looking at dollar on my other screen. New low. And I think that is a booking of that low just there. So let's wait for the tick below it. There it is. Anyways, that was all. Well, that was inside the 950 to 1010 macro. So there's your proof of concept, proof of algorithm. I don't have to prove it to you because ICT already does, but yeah, I don't really know how to close this. I don't really know what to say. Very nice. Other than talking about price, I don't really know what to say. I thought that I would have a lot to say, but I guess not. It's just a nice feeling, I guess. Journal it. All inside the opening range relative to the 930 open. We worked up above buy side, traded into that inefficiency low, worked lower. I mentioned the monthly buy side liquidity that will be used as premium to discount. Let's go through all these markets. NASDAQ, let's adjust these levels. Boom. So NASDAQ coming up on that 0.75 gradient. So I do think we have some room lower, especially because if you take a look, well, actually, let me take that back because I won't be watching this. So the best way for me to say where we're going is watching it live. So what we've done was really good today. It's good to be happy with what you did, especially if it's a day like today and what we just did. Anyways, NASDAQ, dollar right here. Extend that up here. You can see, despite working down into that 5-minute quote-unquote breakaway gap that we would like to see and working into the consequent encroachment, that's what I mean when you can be wrong and still be right. So we worked into the consequent encroachment and then treated this as inversion, despite it going up and coming down. I mentioned this high and this low as a time distortion. So until we break above that high, which once we did, I drew your attention to that. And then once we broke above that, what was the S&P doing? Sinking. Where? To the intraday sell side. So yeah, I hope you have a good rest of your day. I will most likely see you sometime this week. If not, then for sure next week. Little gem that I'm gonna throw. I am planning to set up a paywall on my Discord. So, and I am going to step things up a little bit and start to let's just say I look forward to what's coming in the future, and I look forward for my future. I'm really excited. I think the service I will provide is going to be phenomenal, and I think it's going to change lives. I know everyone says that, but in my humble opinion, even if it changes one life, that's all I'm looking for. So, yeah, I will talk to you when